Hi, everybody. Thanks for joining on this week's episode of Creative Real Estate Ownership. I am super excited today to have Brady Thomas join me. Brady Thomas is co-owner of LaSalle Mortgage here in Oakland. And so Brady helps us fund loans for our many clients. And we've been working together, people in my firm for many years now, and we've known each other for many years. And there's been so many changes in the market coming out of COVID, coming into a high interest rate environment. And my thought is I want to talk to Brady about creative ways that people are getting into this expensive market, in a market that constantly changes. Interest rates are high, they're low, they're moving around. Sellers aren't budging sometimes on prices. I was just really excited to have this discussion with Brady, and we're going to talk a little bit about certain creative ways you've gotten into the market and built value for yourself and wealth over time. And so anyway, welcome, Brady.
Thank you.
And yeah, absolutely. So I met my first exposure to LaSalle Mortgage was I met your mom. Sue Thomas. And it was funny. I was in her office, and it was in Montclair, and I was actually trying to help my dad buy a deal, and your mom was just very sweet with him. It was just like I was trying to explain who my dad was, and she was kind of looking at him, and he was sitting there kind of quietly, and she was like, she was like, I get it. I get who your dad is. And I was like, well, what do you mean? It's like, he came in here with like jeans on and a Bermuda shirt untucked. He lives in North Berkeley. He went to Cal. I get it. You don't need to explain it to me. And it was just this moment of like, I like this lady. I like your mom. So
she's no nonsense for sure. I mean, so I got in the business in 2010. Previous to that, I sold commercial real estate, taught English abroad for a few years. And in that time, my dad was ill. My dad was really sick. So I moved home to help my mom with his care. And I was going to go to grad school. My mom had been a mortgage lender for 25, 30 years. And so I was like, okay, I'll come help you with your, it wasn't even social media at that point. It was just like your internet, right? It wasn't like we were just looking at her website and things like that. And then I remember kind of sitting in there and just having this realization of like, this job that I thought was so much of sales is actually really just helping people and providing value. And I learned that viscerally from watching my mom. It was also really interesting to see her be just a total badass. Because, growing up, my dad had a very strong personality. He kind of, ran our household when we wanted things. And my mom didn't want to say no. She'd say, go ask your dad. And I'd be like, okay, it's okay. I don't even.
It's off the table now.
Yeah. But then coming into this space and then working with her, and my mom being complete, absolute legend that she was at that time, I would ask people questions. They said, don't ask me, go ask your mom. And I was like, oh, okay. So I kind of backdoored my way into the industry, not even thinking I would get into mortgages, but through that experience and really coming to appreciate what we do. I've been here 15 years.
And looking at today's market, and essentially, being in real estate from 2020 to now has been such a dramatic shift, right? I mean, you go from, sub 3% interest rates at times, right? At its very bottom, to now we've been over 7 to do we peak out at 7.5, 8, something like that?
Yeah, we touched 8 for a second.
Which is insane.
Yeah.
So as these cost changes and the cost of money has changed so dramatically, I mean, my position's just been like, you just have to be more creative to buy real estate here. You have to be thinking in different ways about maybe partnering with folks, finding off-market deals, adding units to an existing house, all kinds of things to either, to just kind of get in. And so I was just wondering, in terms of your experience, what you're seeing, how are people engaging with kind of creative finance to get into these tough markets? What are maybe some stories or some tips that you might have in terms of how to kind of compete in these spaces?
Yeah, I mean, I always start with kind of my 3 magic questions, which are the 3 things that anybody should ask themselves before they buy real estate. And these questions are different for people that are buying an investment property and expecting return or appreciation over time. But for people that are buying something to live in, that want to get into the game, I think the first question you want to ask is, are you really excited about the opportunity or the home that you're buying? I think that's really important. The worst thing we can have, having been in this industry long enough, is somebody call you back in 9 months and say, I hate my neighborhood, I hate my home, and I need to sell. That's always a big problem, because the second question that I want them to be able to answer is, can you see yourself living in the home for the next 5 to 7 years? And if you can, then that kind of protects you from fluctuations in the market. We know in general, home values are going to go up, especially in the Bay Area. But if you're one of the unfortunate souls that buys at the top of the market, you lose your shirt if you need to sell after a year or two. If you're able to hunker down and stay put because you love the home, then you can choose to sell in 5, 6, 7 years. When home values have increased, you can break even or make a profit. So having that longer horizon is really important. And then the last piece is, can you stomach the monthly payment? And this gets to the heart of the issue right now, which is that we have an affordability crisis. So rates went from 3% to 7%, and home values have stayed pretty flat or even gone up in some places.
Right.
And so what we have is a situation where it's just very difficult to get into the game. And so being able to look at the numbers and say, hey, I don't love my payment right now. Like, I hope it comes down. But if it stays here, I feel good about my earning potential. I feel good about my job security or my business. And I can make these payments because I believe in home ownership and I understand that this is a longer play. There's no secret. There's no secret sauce to doing this right now. I mean, we can talk a little bit about some of the ways I've seen people successfully navigate it. But the fact of the matter is, you don't have to be smarter than Warren Buffett. You don't have to outsmart Wall Street. You just have to have a strategy in place, because this is a great way to build wealth and preserve wealth over time. But there's no shortcuts. And so those 3 questions of, do you love the home? Can you see yourself being there for the next 5 to 7 years? And can you stomach the monthly payment? I think takes a lot of the pressure off of people to time things perfectly, because it's almost impossible to do that, as we know.
And are you seeing people, because of cost, are you seeing people pivot out of a single family home into a duplex and saying, you know what, this is probably a better purchase for me right now? And, maybe a duplex with some separation where it feels like 2 single family homes living side by side.
Yeah. I mean, I think the opportunities for folks right now are condos, at least in our market, because there tends to be a little bit more inventory, and that's where we're stretched, is inventory. Yeah. So people who are willing to share walls with their neighbors oftentimes can get a deal, and those sellers may be a little bit more willing to negotiate. And then people who are, whether it's multi-unit or not, but this idea of house hacking, of buying a home or a multi-unit and living in a portion and then renting out the rest of it to help offset your obligation, is a really powerful tool, especially for people who envision themselves building some type of portfolio. Great entry point to learning what it takes to be a landlord, right? Because being a landlord it's a job. It's not a full-time job, but it is a job. Like, when something goes wrong, it's you that has to deal with it.
And it's not passive income. This is what I always tell people who want to be a landlord. Don't consider it passive income. Real estate ownership is not passive. It's active.
Well, if you need to do it passively, then there is your income. It's gone because you're paying somebody to do it. Right? That's your profit margin typically.
Right.
So yeah, I mean, I really like the idea of, thinking creatively. And again, I think the first mindset that we need to realize is home ownership a goal of yours? Do you believe in it? Do you understand the value of home ownership? And if you do, then once you kind of reset your expectations there are a number of ways to get into the game, right? I mean, it's, one of the misconceptions we have is that everybody starts from the same place. And this is what I talk to my new buyers about all the time. It's kind of sad, actually, that people don't really share when they have family help or they have a leg up with a cosigner or a gift, because it makes those that don't have that advantage feel like they've fallen behind. And it's so common. I mean, we see it more than anybody because people have to lay themselves bare before us. We know everything, every dollar that's coming in and out.
Yes.
And it's very common that buyers have help from family.
Sure.
They got a cosigner or they had somebody give them money. And so the fact that that's not talked about as much makes people who need to start with a small condo, just to even get in the game, feel like, oh, well, my friend bought their dream home and I didn't. Well, you didn't realize your friend got $500,000 from their aunt.
Absolutely.
So it's everyone has to kind of deal with this with their own framing. And that's why when we meet with clients, we talk to them about 2 things. We talk to them about qualification, which is about what the bank will lend you, your credit, your income, your down payment. And we'll typically work with them through different scenarios. If they want to look at a single family or a duplex, if they want to buy with 5% down or 20% down, we can show them different options. But it's really about figuring out how high you could conceivably go if we were to stretch to your absolute limit for the perfect property. That's half the battle. The other part of it is affordability. So we'll work with them to show them, give them some dynamic worksheets so they can see, okay, well, what's the difference if I offer this amount versus this amount? Or what's the difference if I put this down or use this program? So I want to give them enough information to go back and have the next set of conversations with somebody like you and say, yeah, Brady has me pre-approved here, but we really want to focus on this price point after looking at the numbers.
Right.
Because it has to be a tailored approach, because no two people's lives are the same. Some people have help from family. Some people are taking care of aging parents and grandparents, and they have those expenses, or childcare, or they have health issues. So everybody's different. And I just want to give them enough information to choose what's right for them typically.
Yeah, that's great. And thinking about so some of your clients who are maybe a little frustrated right now, which I imagine there's a few, right? Are there themes other than the houses are just too expensive? Right. Obviously, that's a theme. But are you seeing specific kind of complaints or frustrations coming up, and how are you kind of addressing some of those?
Yeah, that's a really good question. I would say that honestly, what I am seeing quite a bit right now is people that are just getting frustrated because they've made few offers and they haven't been competitive, and they've just decided they're going to take a step back and wait. Mm-hmm. And that comes with its own set of issues. Look, I completely get it. If you are making offers on a home and your price point is around $500,000 or $600,000 with where home prices are, where rates are, and everything that you're interested in is consistently selling at $800,000 or $900,000, it feels like there's no way to bridge that gap. So there is just a lot of frustration around that, and people saying, well, I'm just going to wait until rates come down. The challenge there is the affordability crisis that we have is really related to inventory. And so unfortunately, when rates come down, we'll see a lot of the same type of buyer coming back into the marketplace who's been sitting on the sidelines. And I don't know if we're going to see a huge influx of inventory, because there's so many people that have the lock-in effect of 2% and 3% interest rates. So it is a challenge. I don't know structurally how it is solved, but we're seeing those same concerns or those same complaints with a lot of our clients.
Yeah, absolutely. The lock-in effect, which I think is a really big deal and not spoken about enough, is your refi volume down significantly as a result of that?
Yeah. I mean, the only people that are refinancing right now are people that have to, because maybe they're getting a divorce or they're paying off somebody to go away. Folks that have gotten into trouble with credit card debt and just need to reach into the equity of their home to take care of, because we have a big issue right now with just debt loads in the United States in general. And then some people who didn't lock in a 30-year and they're in a 5 or a 7-year that they got in 2018 or 2019. And now it's going to 7 or 8%, and they want to try to see if they can refinance out. But we've never been a huge refinance shop. We pretty much have remained focused on helping people buy homes for a number of reasons. But one, just because I feel like that's where we add value. But our refinance business is off 90%.
Okay.
Yeah. Way down.
Yeah, that's massive.
Yeah. So, that will come back as rates come down. I really feel like once rates dip below 6%, I think that's the magic point at which some people who have rates in the 3s or even the 4s are willing to give up their low rate and finally go get the house that allows their kids to have their own bedrooms, or, downsize out of their family home into something level or in a different school district or whatever. Right. But right now, with rates being in 6s and 7s, I think it's just tougher for those folks to get the math to pencil because of the payment shock.
Yeah, I agree. Being in the 5s feels like the right place for us too. On our side of the business, it feels like it would just definitely open up more transactions.
Yeah,
more
for sure.
Market.
For sure.
So speaking of, you mentioned house hacking. So you've utilized house hacking to your advantage, your family's advantage. And I have too. My first home was a triplex, and I bought with a buddy, and then I own to this day. And I always say it changed my life, because it did. And it's a really big deal.
Yeah.
Talk to me a little bit about your kind of experience with house hacking, why you think it's kind of a great entry point.
Yeah. So my first purchase was a condo. I bought a condo in 2012. I lived in there for a few years. I was fortunate in that rates stayed low and the values increased. And so I took cash out of that home and went and bought a single family property, the one that I lived in for a long period of time with my now wife, and did the same thing there. We lived in there for a few years, pulled money out, and went and bought a 2-unit. So so my strategy has always been kind of buy and hold.
Yeah.
So I have a couple rules of thumb for myself when I think about hanging on to a property as an investment. And these are the same things I share with my clients. So the first thing is you have to tell me you want to be a landlord.
Right.
Like, especially where we live in Northern California, a lot of these places have very strong tenants' rights. Once you put a tenant in there, it's very difficult to get them out. And if you want to sell the property and get top dollar, you don't want a tenant in there when you sell. So you need to be committed to being a landlord for a period of time that you can't really define. Number two, I want you to leave behind a property that cash flows or at least breaks even, right? Where I've seen people get in trouble is they can get $3,000 in rent, but the payment is $3,500.
Right.
And they think, well, yeah, the property was $1 million. Now it's $1.1 million. Now it's $1.2 million, and values are going to go up forever. Where you run into trouble is when values start to come down or flatten out, then those same people feel like they're putting good money after bad. They're putting $500 a month into the home. They see the values going down and then they panic and they sell under duress or they walk away. So really making sure you have tenants that are covering all your expenses plus a little buffer allows you to not have to pay attention too much to what values are doing, because you can just continue to let your tenant pay your obligation and wait until an opportune time to sell or pull cash out. And then the last piece is, just making sure that you're leaving behind an asset that you can use the right way. So I always suggest to people that they should leave behind a home equity line if they can on a property that they're moving out of, because a home equity line is much more difficult to set up after you moved out of a home. And a home equity line is kind of like a credit card that's tied to that property. So I have 4 properties, all of which have home equity lines on them. And if I need cash to pay taxes or expenses or carry, costs that might accrue, or to invest or to put money into a property, that's where we go. That's the money that we use. And so really being able to reach into the equity of those homes is super impactful. And being strategic about leaving behind a home equity line is really powerful in doing that. Otherwise, you kind of end up with a property that has a tenant in there you can't really touch, you can't really move, you can't really sell. It's very illiquid. Now, it's still great, but it's going to take time to realize some of the benefits of continuing to own. So we've done that. Yeah, we've done that.
That's a great tip.
Yeah.
I never thought, get your home equity line, because they don't make you close it down when you don't care if you're occupying the house. It's tied to the house.
It's tied to the house.
It's out to your
There's typically a 10-year draw period, so you have 10 years of runway to be able to pull from that. But people that are want to be serial investors, or just folks, you may get a deadbeat tenant who doesn't pay rent for 6 months and it takes you a long time to get them out. That home equity line can be your way to continue to make your mortgage payments. Once they move out and you need to fix it up and get it ready for re-rent, that can be a place you go to rather than having to raise your retirement or borrow on credit cards or do other things that are much more expensive.
Yeah. I'm using one right now to pay for repairs on a property.
Yeah.
And it's kind of a lifesaver,
Absolutely.
So it's like, it's definitely.
Yeah. And they're free to set up. They're pay as you go. If you pull $10K out and then you pay it down to $0, there's no payment anymore. Right. So it's just like a credit
card in and out,
yeah.
But a much better credit card. It's around I think I'm around high 7s.
Yeah.
Low 8s.
Yeah.
Which is great.
And credit card is like 20 to 25%.
25.
Yeah.
That's terrific. So the other thing, the 5 to 7 year projection of and we use the same thing too. If you're looking at buying a home, you should think about wanting to be in it for 5 to 7 years.
Okay.
If you're thinking about, I'm going to leave in 3 years, should I buy this? Say, the numbers, it's just much more dicey.
Yeah.
But if you look at kind of historical averages, you usually get that time frame. So for me, the same is true for a rental. So if you're buying a property to live in, let's say you're buying a triplex, I'm going to project out in 5 or 7 years if you can cash flow that project at that property upon move out, right? And so it's kind of the same idea, is that if I'm putting somebody into a multi-unit and the mentality is, can you afford the payment? All those 3 questions on the front end are the same for if you're living in one of 3 units, exact same questions. And then when you move out, can you cash flow, right?
Are you leaving behind something that pays for itself?
Yes.
Yeah.
And that's very crucial, right? Because you don't want to be stuck. You don't want to be stuck staying there if you don't live there anymore. And then you don't want to be forced to sell, right? If you're close, even if it's $300 a month negative to hold it upon move out, that's still money that you don't, it hurts.
Yeah.
And it's hard to potentially catch up to get to either a break even or a positive situation.
Yeah.
So,
Yeah, no, I agree. I mean, I think that's a really smart way to think about it. And just kind of having those frameworks going into it makes it much more simple for people to kind of, it's a lot when you have all of the data in front of you trying to figure out what makes sense. But you're able to position it for people in a way where it's like, okay, can you solve for these 3 questions?
Yeah.
And it's like, okay, yeah, I feel a little more confident that at least I know the broad things. And now it's like dealing with, a really seasoned agent is going to help them walk through more of the minutia of here's our negotiating stance, or here's what we might be able to do, or let's go talk to the city. These are things that we can get into once we've just laid the framework for if this even makes sense in our lives right now.
Right. And there's a lot of variables. And when we do a deal together, we're working together on those variables, right?
Yeah.
There's just a lot of different, pieces to crunch. There was one stat you shared with me that I had read this before in regards to first-time home buyers.
Yeah.
And I think this is really interesting and kind of alarming and kind of negative. I mean, bad news. But share that stat with people because I think it's pretty interesting.
Yeah, I mean, and this is a real sign of where we are as far as the affordability crisis we have in the housing market is in 2023, so the year before last, 32% of buyers were first-timers. In 2024, that number dropped to 24%. That was the lowest recorded percentage of transactions that were purchased by first-timers since they started keeping track of this in 1981.
So the lowest number says 1981.
Yeah, the lowest percentage of first-time.
This is nationwide.
Across the whole country.
Okay.
This is from the National Association of Realtors. Median age of a first-time home buyer, not all home buyers, just first-timers, was 38 years old last year. The median age of a repeat buyer was 61 years old. So it's just crazy to think like somebody who buys a home at 38 is closer to retirement than they are to graduating high school. And these are people that are the first time purchasing. So it's just a sign of how expensive things have gotten and how far afield it's gotten away from, what we consider to be first time home buyers, which is people straight out of college or just getting their first job or getting married and, cashing some wedding gifts and buying a house. It's really much more difficult, which is a testament to, the work you're doing to raise awareness about, what to do to prepare yourself.
Yeah. Yeah. It's a pretty remarkable stat for sure.
Yeah.
So in thinking about, so we've covered some of the frustrations, right? In buying in the Bay Area. What are some of the positive things that are happening here too? And everybody wants to live here.
Right.
I mean, not every. We always like to think everybody likes to live here. A lot of people want to live here. It's very popular. I love it. One of the messages that I share, I'm constantly like, I don't want you to leave the Bay Area. I want you to stay here and get creative. So I wanted, this is a great place to be. It's a great culture. It's the great weather. It's the great this and that. So what are some successes and some maybe some good news that we can kind of leave?
The one thing I will say is that there are some opportunities right now. I'll tell you an anecdote about myself. So the home that we live in now, we bought in 2021. In 2021, when we purchased, rates were in the high 2s, low 3s. And so we locked in a fabulous rate on our mortgage. We also paid a premium for that home. Like right now, if I were to sell that same home, it's now 3.5 years later, I probably would not get the same price I paid. That's a testament to where I live. And not everybody's the same. Some people have built up equity. Where I am, we bought at the top for sure. So what that means is my payment is my payment. I'm probably never refinancing that mortgage. Now, boohoo, who have a 3% rate, so nobody should feel sorry for me. But it does mean that I have the lock-in effect of my mortgage, my taxes, my insurance. This is what it is. It's going to be like this payment forever. Contrast that with somebody who's buying now, who maybe is able to purchase. I mean, we made a preemptive offer because we were nervous that there were going to be 10 and 15 other offers. We paid a premium. We got in. Now you might be able to make an offer on a home with no other offers or only a few. You might be able to negotiate seller credits to help buy down your rate or cover some of your closing costs. And the thing for me is I can never refinance my price. My price is my price, and it'll be like that forever.
Right.
But people who buy now that get a better deal, they're getting the lower price and they will be able to refinance their rate. So that's where I see is like if people are willing to zig while others are zagging, keeping in mind you still need to make sure you love the home, you can see yourself staying there, and you can stomach the monthly payments. Don't get, too far afield.
Right.
But if you can get into the game now and you really do believe in the power of homeownership, and we know at some point when rates come down, we're going to see a lot more buyers coming into the marketplace. These are the people that can be the winners when we look back in 2 and 3 and 4 years.
Yeah.
So that's what I talk to my buyers about. And then also folks that maybe have bought their starter home and are thinking about how they get into their forever home. This is an opportunity to do that as well, because again, you might not be able to buy in the neighborhood that you would in a few years when, the market has corrected itself a bit and rates are lower, but you might be able to get in now.
Right.
So yeah, I mean, it's obviously a challenge, but there are some opportunities there. And I think another place that buyers can have an advantage is we've just seen the number of agents shrink so much that working with an agent who is really skilled or has intel and provides serious value as far as opportunities or market expectations or mismatches between pricing and demand, that's another place where I've seen buyers just come away with really shockingly good deals right now. So they're there to be had. It's not without its pain. But again, if you do what everybody else does, then there's no opportunity. But if you're willing to say, hey, everybody else is worried about the housing market, this is my time to jump in.
Right.
You can move against the fear and do pretty well.
Yeah. Us on the listing side, a few years ago, obviously we were strategically staging things and pricing things and doing smart upgrades and all those things. However, in many ways, you put a for sale sign on the property and it moves. Right.
Yeah.
And it's different now. It's different now. People are being pickier, and there's things that are sitting that probably shouldn't sit,
right?
In some ways. And so if people can kind of like see through that and dig and find value in different ways, I do think there's opportunities as well.
I agree. And I want to be clear. Like, I am not one of these people that says it's always a great time to buy out. I don't like that, rates are high, buy a home, it's a great opportunity. Rates are low, buy a home, it's a great opportunity. Like, I think people see through that. But I do feel like if home ownership is a goal of yours, and you can figure out a way to make it work, this is a really interesting time to get in, because you're going to have some advantages that may not be there when you're competing against the full, force of.
Right. Once you commit to saying, I want to own a house, then this is what this market can provide you with.
Yeah.
That's what I was wanting to talk to you about.
Yeah.
As far as, so we're dealing with, just a quick kind of macro snapshot, because it's kind of timely stuff. We're dealing with tariffs. We're dealing with a federal administration that is, speaking of zigzagging, kind of all over the place. Interest rates, I don't know where you kind of think they're going. What are you kind of seeing on the horizon or currently in terms of the kind of macro environment as it relates to financing?
It's impossible for me to answer that question right now. In general, what's bad for the economy is good for interest rates. So, in the stock market and the bond market kind of work in opposition. They're fighting over the same investment dollar. So when everybody's feeling really positive about things, money floods into the stock market and comes out of the bond market, and so rates go up. But when things get really kind of worrying, money floods into the bond market and out of stocks, and interest rates improve. That's what we would typically expect to happen. That's what has happened forever. This whole tariff thing is so incredibly fraught because, one, it is going to push us into recession. We've seen that. I mean, I think everybody's clear. Even the administration is talking about a recession being good. But the increase in inflation and the fear over having a stagnant economy plus inflation is going to keep a lot of pressure on the bond market, and maybe, the Fed is not going to be willing to lower rates. And so we may get the worst of both worlds here. And that's my fear. I hope I'm wrong. I hope that what we're getting is a game of chicken that gets resolved, but it feels like we're careening towards some wall and nobody's willing to avert. So again, I mean, I have very serious fears about what this could look like. But with that comes opportunity for people that can seek it out. Right now, as we're talking here in May of 2025, interest rates are like in the high 6% range. One or two things could help affordability. One of two things: either rates come down or values come down. And I don't know and when either of those are going to happen. On one side, we have a lack of inventory. And then, the housing market itself pretty strong because of the rules that are in place. A lot of people own their homes all cash. A lot of people actually qualified to make their payments based on their income, their assets, their credit. And so for us to see like a big crash, and there's a ton, and people have tons of equity in their home. So for us to see a big crash in values feels less likely. And then now if we're heading into kind of this upside down world of low economic growth and higher interest rates, that doesn't bode well either. So
yeah, I mean, Oakland, I think, has seen some price improvement in terms of like a little better on the affordability scale, is what I've seen. Berkeley is flat or going up. Piedmont flat or going up, right? El Cerrito, what's your feeling on El Cerrito right now? As far as I feel like there's some value there.
Yeah, anecdotally, I feel like El Cerrito is a really popular place right now. It's having a bit of a moment. And I'm born and raised in Oakland. I love Oakland. We have an issue or having issue right now with public safety and with city government. Oakland. And so it's tricky. But I think some of the places that are seeing, some improvement or a lot more interest in those markets are, San Leandro, headed down that way and they up.
I feel like San Leandro and El Cerrito are very similar anyway. It's like that kind of similar, well-run cities, relatively safe. And so thank you.
Yeah.
I really appreciate this. And I think everybody's going to find this, really interesting. And I appreciate you sharing your advice and your wisdom here with us today.
Well, thanks for having me.
Yeah. Right. So my phrase when I leave is buy, build, and manage with love, and the rest will work out. And that's kind of the way I think about this stuff, is like you have to be approaching this with a lot of heart and a lot of desire, and then you can find a way. But it's related to your 3 questions. So So anyway, I appreciate your time.
Right on, man.
All right.
Thank you.